Trading through a prop company can be extremely difficult. And the more you blow up, the more money they make off of you. So if you're looking for a quick tip, how to avoid blowing up your prop account, stick around for this video. Hey, what's up everyone? It's Flexin' Joe, back with a video that specifically pertains to Apex Trader funding. This is their website right up here. And when you go to their website, you want to click the sign up button, and that's going to bring you to their two different account types. They have the Rhythmic plans and they have the Trade-Evade plan. I personally prefer the Rhythmic plans for this one key reason that I'm about to show you. And I know that it has improved my trading. It's helped me maintain the status of my accounts, and it's helped countless others as well. So once you select your Rhythmic plan, I like the 50K accounts. You click the 50K account and you sign up, and you follow the instructions for the sign up. Once you've signed up, follow the instructions to log into your Rhythmic account, you want to go to the trader dashboard. So if this screen doesn't automatically open, you'll just double click right here and it'll open up the trader dashboard, and you want to make sure that you either select all the accounts or you filter it however you want. For the purposes of this video, I'm going to show you that it does work on both the funded account, which is the PA here, and the evaluation account. What you're going to do is you're going to right click on that account and click View Risk Parameters. When you click that, this screen here will pop up. This has to do with time changes. You will just click OK, and you will go to this tab right here, Risk Parameters Set by the Trader. What you want to do is you want to go under this Auto Liquidate tab and click Enabled. You want to set a loss limit on your account, and you want to select a number that is appropriate for your account. Now, a $500 loss limit is what this is set at. You need to decide what your maximum risk is per day and how to honor that. But it's going to vary from trader to trader, you know, anywhere between maybe $200, $800, $1,000, whatever you think you can comfortably lose in a day and still not have the account at risk of blowing up after just a couple days. You know your trading stats better than anyone else. This is your decision. This is incredibly important because if you ever accidentally leave an order sitting on the chart like this,
order filled. Order filled.
you won't risk the account blowing up. It'll actually have a maximum loss. And then also, if you are prone to maybe over trading, tilting after you have a loss, or just instantly retaking the same trade, whatever, you know, emotions that run through you pretty high level like this,
Stop filled. Order submit. Order filled. Stop filled. Order filled. Stop filled.
you will be able to help mitigate that by having a maximum amount that you'll lose on the account, and then it will lock you out. Keep in mind that if an order or if the market moves extremely fast, especially with NQ, and you're trading with larger size, then you could experience slippage, and it might not stop you at 500. It might stop you at 600, 650, 700. So it might just continue to go down real fast before the system realizes that you stopped or that you needed to stop. But you should be able to utilize this trick to help preserve your accounts. So let me know in the comment section down below if you caught the Easter egg in this video and if this tip helps you. Thanks for watching.